we expect, in a conservative case, for the globe to consume as much copper in the forthcoming 22 years as has been produced and consumed by all of humanity throughout all of history.
David Cole joins us today. He is the president and CEO of EMX Royalty Corp. We are talking about exactly what his company does, what a royalty is, how investors can benefit from this business model, and his outlook on two of the metals within his portfolio, the primary ones, copper and gold, metals we're all interested in. Dave, welcome to the show. Pleasure hosting you.
My pleasure to be here, David. Thank you.
Before we talk about EMX Royalty itself, let's talk about the market. So your outlook on gold. People are wondering whether or not the bull run is over. Certainly, we've had a good run in the beginning of the year, but the second half, gold has been trailing sideways, if not slightly down, as interest rates headed higher. What's
Yes.
your outlook for the metal?
I don't think we're quite at the bottom yet of this little correction that we're in right now. Of course, with higher interest rates, people are moving into the US dollar. Something that's good for the dollar is bad for gold. It'll be a little while for that cycle to complete itself, but certainly long term, we remain bullish.
What are some of the drivers long term that would propel you to have this bullish thesis?
Supply demand imbalance and overall loose monetary policy on behalf of governments around the world.
Now, one of the factors that gold reflects or is a reflection of is the inflation rate. Now, inflation has been coming down since its peak in June 2022. Headline CPI has been trailing upwards over the last 2 months. What is your outlook on inflation, just based on your personal observations or data you looked at or people you've talked to?
You know, it's amazing how resilient the U.S. economy is. The labor stats came out yesterday, I believe, and the job market's stronger than they anticipated. It's interesting. It's interesting to observe. It feels like the higher inflation rates than we've had in decades in the past is systemic and likely stick with us for a little while. I believe that they will be able to keep it under control, however.
One of the things that people are wondering is whether or not gold can compete with treasuries in a rising yield environment. Certainly, we've got things that are near risk-free by designation, yielding 4 or 5%, which is a tough act to follow for any asset. How is gold going to be positioned to compete with something like that?
Long term, are treasuries risk free? That's an interesting
Yeah.
question. We probably won't get into that today, but no, I understand the question. And that's why the price of gold is moving backwards a little bit right now and having a correction, is because the higher interest rates do attract those people that are chasing yield to come into the US dollar. That is good for the dollar. And of course, gold is the anti-dollar. So as long as that trend is in place, we'll probably continue to see a bit of a correction. I'll make the overall point, however, that gold doesn't, gold oftentimes trade in anticipation of events happening, not actually on those events happening.
Let's talk about GDX and GDXJ. Certainly, they've reacted to certain events. But investors are wondering whether or not there's still room for improvement in terms of its share value in this sector, because it's underperformed the gold bullion this year. And so investors are wondering, first of all, why? And second, what can be done to turn this around from the sector's point of view?
Yeah, it's not an uncommon phenomenon in my career to see the stocks related to the commodities have moves that precede the actual move in the commodity price. So we see the GDXJ go down, for example, before gold price goes down, and vice versa. We'll see the GDXJ start to move up in anticipation of the gold price moving up. And once again, these are situations where the market is reacting to what they perceive will happen, not necessarily to what actually happens. And that's a phenomenon we've seen in the past. And I'll point out that we're in a deeply cyclical industry, which is always painful for those of us that are, spend our lives in this industry. But we need to learn how to utilize the cycles to our advantage rather than be used by the cycles. And I can tell you that when this sector gets washed out, those are fantastic buying opportunities.
Well, can you just comment on whether or not margins are still profitable for miners at $1,900 an ounce?
Yeah. So it's very clear that most of the gold miners out there today are doing quite well.
Well, that's a good point. If investors are forward looking, perhaps then they're just projecting a downturn in the equity markets overall, which would impact small companies of all sectors. It's not so much a reflection of their outlook on gold. Is that what you're saying?
Yeah, that you've got it, David. Yes, that's correct.
Okay. Let's talk about copper now, the other important metal in your portfolio. The outlook on copper, I've gotten mixed responses. On one hand, you've got the electrification of the world. You've got EVs taking up more of a market share in the overall automobile sector. You've got the infrastructure bill from the United States, all pushing up demand for copper. On the other hand, you've got the slowdown in China. You've got the world perhaps going into recessions in various parts of not just Europe, but also North America coming up. That could weigh down on copper demand. What's your take? How do you balance those forces out in your outlook?
I would agree with that completely. I believe that the slowdown in China that we're seeing right now is definitely a negative in the short term. However, when you look at the long term for copper and other metals across the periodic table, those demands have strong compounded annual growth rates throughout decades. And some of these are accelerating thanks to all types of new technologies that are consuming new metals, and copper is right in the thick of it. The electrification of transportation will certainly consume huge quantities of copper as we move forward, in addition to a whole plethora of other uses for copper that continue to expand across the globe. We expect, in a conservative case, for the globe to consume as much copper in the forthcoming 22 years as has been produced and consumed by all of humanity throughout all of history.
Okay.
Rather
That is that.
astonishing when you think about it.
Yeah,
Yeah.
that is an astonishing projection. Can you give us one or two use cases of copper that will
Yeah.
propel this demand? Yeah.
So copper is used in practically in the production of practically everything, right? So it's either actually in whatever is produced or was involved in the production of that via electrical wiring, plumbing, heat conducting, such as in radiators and air conditioning units. So every skyscraper that's built in a developing country in the world consume literally tons of copper. Every car that rolls off the line, whether it's electric or if it's an internal combustion engine, has a very large quantity of copper in that vehicle, particularly the electric ones. But even the old school internal combustion engines, the radiators and wiring, et cetera, all copper. So we've just seen a continual increase on a compounded annual basis of copper consumption before electrification of transportation. That will just add fuel onto the fire.
The projection that you gave, which is that over the next 20 years we'll be consuming as much copper as all of humanity in the past, does that number concern you as a miner? Do you look at that stat and think to yourself, gee, how do we as an industry meet that demand?
I find it exciting as the holder of mineral rights around the world, being exposed to large copper assets, and I think that's exactly where we should be. And I would encourage investors to start to think about that. The My concern about whether or not the mining industry will actually supply the copper that is demanded by the planet. I believe that human ingenuity, geology, advancement of geology, the advancement of engineering and metallurgy, and government reaction to these challenges will likely put us in a scenario where we can meet that demand. But it's probably not going to be at today's copper price.
This will tie into our later part of our discussion when we talk about your jurisdictions, but I'm just curious, since we're talking about copper now, where in the world do we see the most copper deposits, the richest veins, so on and so forth?
Chile remains one of the largest copper producers, or if not the largest copper producer in the world. But copper deposits do occur in a variety of geological terrains throughout the world. And there's a big deposit in Iran. There's deposits throughout Russia. There's deposits in the southwestern portion of the United States and British Columbia. I could go on and on. It is a commodity that can be found, it can be developed. It's just a function of the economics.
Interest on gold. Do you think we've reached peak gold? That was a topic of discussion for the last couple of years.
That is entirely possible. Yeah. And once again, that would be a function of the price relative to what we call the cutoff grade around the world. So if prices move up and they lower the cutoff grades, it makes it more economic to process lower grade ore. But generally speaking, the amount of gold deposits that are being found on the planet is starting to diminish. And it is possible that we've reached peak gold or very close.
So then what is the gold industry's solution to this phenomenon?
I think that the gold industry solution is that the price of gold will go up, and that that will lower cutoff grades over time. That's most likely. Mm-hmm.
All right. Well, before we talk about your company, give us a sense, or tell us a little bit more about you. Give us a sense of your professional background and why it is you transitioned. You were telling me offline, you transitioned from working for Newmont, the world's largest gold miner, to now the junior mining space?
Yeah, I'm educated as an economic geologist, David, and we have become a polymath and working in this industry for 40 years now, 18 and a half years with Newmont Mining Corporation. And I worked for them straight out of school. They assisted me with my graduate studies at Colorado State University, studying economic geology, and had the opportunity to work for Newmont in a variety of different countries around the world: Indonesia, Southeast Asia, Nevada, Turkey. My last job with Newmont was exploration manager of Turkey, which was a very interesting place to work and one of the areas of focus of EMX Royalty Corporation. And after spending that great learning period at Newmont Mining Corporation, a wonderful company to work with, I'll add, and also a shareholder in EMX Royalty Corporation, then I left to start EMX and was very pleased to have the support of Newmont as I did that.
Was that your first exposure to the royalty sector when you founded EMX? Certainly, you've been exposed to the business model before. I'm just curious as to why you decided to start a company in the royalty sector. Presumably, you could have started any junior mining company.
That's an interesting question. So, in my experience, while I was at Newmont, I witnessed the growth of Franco-Nevada. I saw Pierre Lassonde when he was young, coming to the Carlin Trend where I was working for Newmont in Nevada, and he had a big smile on his face as he was collecting royalty checks. I thought that's a good business to be in. Another example is a gentleman by the name of Lyle Campbell. He's now passed away. He built a private prospect generation company that accumulated royalties, what we call royalty generation, in the state of Nevada, very successfully. And I recognized that he was focusing on what he knew how to do well, which was acquire prospective mineral rights, build geological models, and sell those assets off and keep royalties, and thus the exposure to those mineral rights as they're developed by parties with greater capital availability and greater engineering capabilities to be able to advance major industrial complexes that are required for today's mining. And he did that very succinctly, very well in his career. I made observations around these examples and emulated those in the development of our business model.
Yeah. I think Franco-Nevada has less than 50 employees and a market cap of $35 billion. And a market cap to employee headcount
Right.
basis is probably one of the highest valued companies in the world. So
Yep.
it makes sense. I think that was a good time to back up and explain to the audience what is a royalty. When you talk about Mr. Lassonde collecting royalty checks, what do you mean by
Yes.
that? What's he doing there?
So, royalty in the mining industry would be similar to one in the book industry or music industry, where maybe the person who writes the book sells it and keeps a royalty. Therefore, every time a book sells, they get a cut off the top. Royalties are commonly on gross revenue. So that's the case in the mining industry. We call them frequently, they're not always net smelter return royalties, but that's the most common type. And that is the gross revenue to the miner after the smelter takes their cut for processing of the concentrates or refining of the doré. So these financial instruments, these royalties, are very powerful because they're at no cost to the royalty holder. You're exposed to development success, exploration success, commodity price upside, et cetera. And we call those aspects of upside within the royalty sector optionality.
Now, where does EMX fit into the models that you described?
Yeah. So EMX accumulates royalties around the world through execution of the royalty generation business model, where we actually go out and acquire prospective mineral rights, become the underlying owner of those mineral rights by staking mining claims in Nevada, for example, or acquiring exploration licenses in Sweden, Norway, et cetera. Turkey was an area of focus for us for many, many, many years. We then coalesce the existing geological data from governmental sources or industry sources. We collect additional data in the field. We model that to illustrate how prospective those assets are, and then sell those on to an industry that's hungry for new discovery opportunity in exchange for cash payments, share payments if it's a junior company, in-ground work commitments, and always a production royalty at the end of the day.
And just to clarify, these assets that you purchase, have they usually been previously owned or under ownership by another company, or is it just land that's been not yet staked?
So it'd be a combination of both of those, actually. So in many cases, we're out staking mining claims. That's what we call open ground. There are no mining claims there, and we're an expert at doing that. And of course, it's easy to add value when you're acquiring something for almost free. But in other cases, we're definitely acquiring properties from previous owners, or acquiring properties that were held by somebody else in the past, and we're able to obtain those data. And then there are cases where we actually will buy royalties from people to augment the portfolio of royalties that we grow organically. And I believe it's particularly powerful to grow a portfolio of royalties organically whilst you're continuing to look around the world and seek to find royalties that you can purchase at astute pricing to augment that portfolio. I'll point out that you mentioned Franco-Nevada. Franco's a shareholder in EMX, and David Harquil, the chairman of Franco-Nevada, one time said to me, "Dave, we believe it's particularly powerful that you're growing royalties organically and buying them. Good job." We delighted to get that compliment from David Harquil, and delighted to have Franco as a shareholder today.
Walk us through, Dave, what happens after you acquire a property or an asset from either, open land claim or like you said, perhaps from another company, to the point where you sell this particular asset. What happens in between?
Oh, so we coalesce data and we do geological modeling. So we're a bunch of
What does that mean for the layman who doesn't understand
Yeah.
mining exactly? Wait,
So there are different geological models as to how gold deposits or copper deposits are formed geologically, and then how they would express themselves in the mountains or the hills of today, right? And we're experts at going in and doing geochemistry, geophysics, geology to look for the right environments that are conducive for finding these deposits. We coalesce that data, we illustrate, oh, there's a big gold anomaly on top of this hill, and it is associated with the kind of rocks that we like to see when we're looking for gold deposits. And we show that to Newmont Mining Corporation or Barrick or even junior companies that we're associated with, and say, look at this opportunity. And they say, that's great, we'll buy it, and we'll give you a work commitment in ground and a royalty.
and how long do you usually keep these assets for before you sell them off?
Of course, like everybody's selling widgets, you want to sell your widgets quickly. Our widgets are mineral rights. I would say a common hold period for us, David, would be 1 or 2 months to 1 or 2 years, right in that range. Mm-hmm.
I think generally investors would just want to know how your business model generates steady cash flow for your company. Can you comment on that?
Sure. So I'll put them into 2 different categories. There's the categories of the production royalties that are paying production royalty payments coming off of our big copper mines, for example, that we have royalties on. And there's 2 really big kingpin generational copper assets within the portfolio. I'm very proud of that at this point in time. But also others and that are coming up and paying production royalty payments. And then in addition to the production royalty payments, we also have cash flow coming in from share payments, pre-production, what we call advanced minimum royalty payments, annual lease payments, which can be paid in shares or cash. And all of those accumulate up over time to a few $1 million a year that augment the monies that we get from the production royalty payments.
Let's talk about your jurisdictions now. You've got projects all over the world. So I'll let you comment on where you're most highly concentrated in. But just looking at a heat map of your projects on your website, you've got Europe, North Africa, North America, South America, Asia as well. Am I missing any continents?
Well, that's pretty much every one of them. Yeah, we don't have anything in Antarctica.
You don't have anything in Australia?
We do have assets in Australia. That's correct.
All right. Okay.
And
Yeah,
that
I'll let you
speaks
comment on
to.
these.
Sure, happy to. Rather than saying we have, I'll give you another very interesting example. We have substantial royalty footprint in the country of Haiti that is currently controlled by Newmont Mining Corporation as a counterparty. So we didn't say, gosh, we want to go to Haiti to prospect for copper and gold. What we did and how I built this company is actually targeted engaging strong geological talent with a history of understanding the business environments, the discovery history of mineral belts around the world, and bring in those sharp entrepreneurial geologists. And then we leverage those talents into a portfolio of assets. And that has naturally matured into assets across the globe, touching 13 different countries.
Investor might ask you, why diversify yourself all over the world? Are you not increasing your risk to different, exposing yourself to different jurisdictions? Why not just focus on one area?
Well, I was always taught that a diversified portfolio decreases risk. So if we were highly concentrated in, say, Chile, and Chile were to have a dramatic change in how they governed the mining industry, then we would, that could be a headshot. I don't believe that will happen in Chile. I'm just using that as an example. We're in 13 different countries around the world. We're spreading that jurisdictional risk. And I'll point out that my view in general with respect to risk analysis, which is really a lot of what my job is that the perceived political risks in countries around the world tends to be fully, if not overvalued, because people believe that they understand that and they read about it every day in the newspapers. The greater risks that we actually face are geologic and engineering risks. Those are something that we as technical people better understand.
What do you mean by geologic risks?
Geologic risk would be the risk as to whether or not there's actually a large enough gold deposit of high enough grade that can actually be found and developed and be economic.
Just a note on the political stuff, because you did bring it
Yeah.
up. There's a lot of talk about the risk of nationalizing mines, especially in South America. Is that a significant risk, or is that just headline fear mongering we see in the news?
I believe that the truth is somewhere in between those two end members. I believe that those governments are smart enough to know that when those mines become governmentally owned, which has happened in the past around the world, they become significantly less economic, and that it's actually better for society, better for the governments when they're efficiently managed by private industry that are taxed and taxed appropriately and efficiently. The IFC and the World Bank advise developing countries around the world with respect to how to do that. And of course, there can be political noise from various factions that discuss whether or not the industries are supporting the local communities to the degree that they should or not. And there's always a push and pull there. Generally speaking, I believe that the best thing for local communities, for the federal communities, the federal governments of these countries, and for the mining companies and for the employees, is for them to be efficiently managed by astute international mining companies that know that they pay an appropriate amount of tax and royalties to those governments.
Okay, so that risk aside, just from a purely technical and geological perspective, how do you pick the projects then?
Oh, so smart geologists is the short answer, and understand the exploration history, the economic environment, and very importantly, there's things that are trendy within the industry. For example, right now, copper and gold porphyry deposits, as a particular style of copper and gold mineralization, are quite trendy. So we know that if we acquire a solid, good-looking copper porphyry project, we illustrate a strong geochemical anomaly. It's within an environment where we believe a large industrial complex can be built with social license. That's a sellable asset. So those are the kinds of things that we're looking for. We're looking for assets that will make our customers, who are major mining companies and junior mining companies alike, happy. Happy customers is always important. So we're selling these assets off to them in combination for the deal terms I mentioned, which always include a royalty.
So you mentioned potentially Barrick, Newmont as the customers to which you sell these assets. So generally, I'm guessing then it's the biggest producers that you're targeting.
Yeah, there's two groups of companies, David, that we sell assets to. Those would be some of the major companies in the world, including Rio Tinto, the largest mining house in the world. I believe we've sold them a half dozen projects over the course of the last 4 or 5 years. Great to have repeat business with people of that nature. We love having strong companies working on our projects. But we do another class of deal where we're working with junior companies around the world. And it's the junior exploration companies in the world that are making the lion's share of discoveries right now. And we're delighted to work with them. Those are commonly share-based transactions. The shares that we get paid for our projects when we sell them is another added aspect of optionality for us, and another place where we can make significant amount of money over time.
I guess a shareholder potential investor would wonder, Dave, what is it you're doing that's unique to the process of which the Barricks and the Newmonts of what are already doing? In other words, the process in which you're looking for projects, acquiring them, coalescing the data, why can't they do it themselves? Clearly, you must be doing that better, where there's a different process.
So they do it. They do it themselves, and sometimes they do it well, and sometimes they do it less well. Generally speaking, I'm of the opinion that we're more fleet of foot, we're more efficient. We can move in and out of terrains more quickly and acquire assets. They need to look for opportunities to expand their resource and their reserve base from every avenue possible. They have to look at corporate transactions. They have to look at acquiring assets from folks like us. They have to look to do it themselves. And various major mining companies over the years have focused on different aspects of that with respect to how to replace reserves. Those that have been most successful have said we do it all, and it comes back to this belief that prospective mineral rights are dear assets that you want to own and be exposed to. And we're experts at going around the world and acquiring prospective mineral assets, illustrating their value, selling them off.
Finally, one piece of company news I'd like to touch on that's probably important for your shareholders to understand is the dispute you've had with your company and Zijing, particularly with in regards to the Timok asset. Tell us about what happened and how that became resolved eventually. And I think you did get paid your $6.8 million in royalty payments.
And more importantly, continuing royalty payments into the years in the future, right? So that this is a mine that will have multi-decades of mine life. And I'm happy to tell you the history. We came into Serbia right after the Balkan Wars and acquired exploration licenses there right as it was opening up. I actually advised the Serbian government with respect to their mining law and their concession legislation, and became the first foreign company to be granted metal exploration licenses in Serbia after the Balkan Wars. We sold those licenses off for a combination of cash, shares, and royalties. As luck would have it, a major discovery was being made, and we understood this before it was truly fully recognized across the industry, because we had our ear to the railroad track, and because, most importantly, we understood the geology. That gave us the opportunity to go out and buy the royalty that did exist over that asset. It was quite close to another royalty we had, but unfortunately, our royalty didn't quite touch this big deposit. And when we bought that royalty was not perfectly written. It was written in a manner such that the royalty had the ability to be diluted. And Xinjiang, in my view, appropriately interpreted that the royalty had been diluted. We also appropriately interpreted it legally as to the way the document was written, that it had not been diluted. I believe both sides were quite responsible with respect to how we conducted ourselves in that renegotiation. And that is complete now. We're receiving our royalty payments. I'll point out that Xinjiang was honorable to work with, and we have a good relationship with them now, and look forward to their immense success on what looks to be one of the biggest copper and gold deposits developed anytime recently in the world.
Do you think your share price is currently reflecting this resolution? In other words, how do you think this is going to? Not yet? No.
No, not yet. No. And that is, you mentioned previously about how the whole sector is in a downturn right now. And so, I would attribute some of that to the fact that there was a cloud over the stock relating to this renegotiation. It's now been settled, but that settlement occurred in a time frame when the stocks are being sold off. So we've not fully recognized the value of this transaction in our share price at all.
But you do expect it to add more confidence to investors once the news gets out.
So and they see the cash flow, right? So right now it's paying close to $4 million US per year, while they're mining in the smaller upper high grade zone. When they get into the big, deeper porphyry deposit, which is the huge deposit at depth, then the royalty rate or the royalty payment should go up substantially. When the market starts to understand that will happen, we should see a repricing of our security, particularly when you take into account that we have other such assets within the portfolio as well.
I'm curious as to what the margins of royalty businesses are compared to, let's say, a producing company, a large producing company, not a junior. How do they differ? How are they similar?
Yeah, they're entirely different. And this is an important thing for us all to understand. And this is why royalties are such phenomenal financial instruments. So if you're a royalty holder, you get the money in your mailbox. And so it doesn't cost you much money to walk out to open up your mailbox and get the check, right? So the margins are very, very, very high. You pointed out the fact that, Franco-Nevada only has 50 employees and a $25 billion market cap or more, perhaps. They have
a lot of people walking to the mailroom. That's what it is.
Walking to the mailroom.
A lot of different checks coming in every month.
Exactly. Whereas miners, in a good year, their margins are 7%.
The downside of this is that one would say you're at the mercy of the companies that you work with, or the projects that you have, or the companies that perhaps are potential customers. If they're having a bad year, they may not want to acquire more properties. How would you respond to that?
So once these major mines are put into production, even if they're having tough years, they tend to keep them in production because the cost to turn off a major mine is substantial. So we'll see deposits, not that that's happening today, but I have other times in my career seen situations where copper mines were not making any money, maybe losing a little bit of money. They stay in production because those are big ships to steer, and you can't just turn them off one day and back on the next. And so that's all to the benefit of the royalty holder. We still keep getting those royalty checks, right? Now, your other comment about whether or not the capital markets are robust and that fuels the purchase of royalty generation assets, those mineral rights that we're selling to create the royalties. That's a different question, and that does ebb and flow with the capital markets. Um, EMX has had, I'm very proud of the fact, a solid track record of selling projects even in down markets, but certainly the rate of sales decreases.
I'm curious from a geologist's perspective, what technology or new technologies would you like to see being implemented in your industry that would help with the coalescing of data, or other areas that other aspects of your job that you focus on?
So there's been some huge advances in drilling technology in the oil industry. And the mining industry has yet to really adopt and take into account some of these new drilling technologies. I think it's only a matter of time. I know there's a number of groups that are working on that. That could be a real boost to us to be able to drill deeper, more accurately, and less expensively. And I believe that is forthcoming. That's an area where some new technology would really be to the benefit of the mining industry. But there are others as well.
And finally, how do you plan to add shareholder value?
Continuing doing what we've done for 20 years, David, and that is generate royalties and then buy royalties when we see them that are distinctly of value to augment that portfolio and let the cash flow roll in.
What's your long-term 5, 10 year plan? Is it just to continue doing what you're doing, perhaps expanding other projects? Are you positioning your own company for a potential buyout? What's the goal here?
Well, I'm here for the shareholders. We'll always do what is right for the long-term shareholders. Generally speaking, I would say that our business model is highly refined, and there's no reason to fix something that's not broken. So we just keep our business model moving forward and accumulating assets the way that we have. I see that as our plan. If someone eventually offers us substantially more money than the company is worth, then we certainly would consider that. Many companies have come forward and mentioned the possibility of a corporate transaction with the EMX. That makes sense when you look at the depth of our asset base. Generally speaking, when we've analyzed those, we felt that the right thing to do was to continue down our pathway.
I understand. Where can we learn more about your company and read about your properties?
EMXroyalty.com.
Oh, excellent. We'll put a link down in the description below. Make sure to click on it and read more. There's investor presentations and financial statements for you to go over. Thank you very much, Dave, for your time today. Appreciate you spending your time to educate us on royalty businesses and EMX. Thank you.
It's an interesting sector. And David, thank you for your time.
Interesting. Yeah, we'll follow up next time for sure. More news to come. Thank you for watching. Don't forget to like this video and subscribe.